Good afternoon, everyone. Good afternoon. This is Charlie Tian again, and very glad to see you. Very glad to see you every month. And I see a few people already telling and told us where he is, where she is. And yeah, please do that. And I'm here in Plano, Texas. The weather is still pleasant, and tell me where you are. And I love to see you again every time. Yeah, I see people from different parts of the world, from UK, from Switzerland. Okay, let me share my screen here. Today, first thing I want to talk about is our app. If you come to our homepage, here I'm sharing the screen, and there's a place says change log. Here you can always check where we are working on, what we're working on, and where we are on the new features. And you can see the second item, up to 18th November, we added all-in-one screener in mobile app. So now with our GuruFocus mobile app, you can use the all-in-one screener and to access your screens, to check the new stocks all the time on your phone. What stocks are appearing on your screens, and you can download the app, of course, in Apple Store and in Google Play Store. And another thing we changed, we made some changes, is the 30-year financial page. We made a redesign, but we made some more changes to make it easier to use. Actually, we got requests from users. They want to see not just 15 years, because normally, because of space limitation, we will display a 15-year financial here. And if you want to look at the longer history, you will have to look at the chart only. Look at the chart when we don't display the numbers. But now you can see all the numbers. Actually, we added here is 5-year, 10-year, 15-year, 20-year, 30-year, and all. And a place where you can also customize the years you want to check. For instance, now we're displaying 20 year, 10, 15 years. And you can click on this 20-year. It will display the 20-year history for you, and it loads a little bit. And the latest years are appeared always, and the trend chart is changed to 20 years. And sometimes if your screen is not big enough, you can scroll here, but the latest years are always displayed. And 20 years here. If I click on 30 years now, you can see that, yeah, now you can go to 30 years. Still, we're displaying the latest years by default, and you can scroll back. You can go all the way back to 1991 for a company like Walmart. Actually, there's an all button here. It will display all the financial data we have, and you can see much longer history here. The trend lines is also modified here. Here you can see until year 1979, you will be able to see the historical data for company like Walmart. Of course, some companies don't have long enough history. Yeah, if you click on that, you can see the history in chart. Click on each row of data. You can click on the history in chart, and then you can check out 20-year, 15-year. Yeah, and we always display the average growth rate here. You can see when it's 20 years, average growth rate is 7.53%. And when it's 10-year, it's 4.36%. We can clearly see that Walmart's revenue growth has been slowing down. Hello, hi, everyone. If I missed your hello. And tell me if you like this feature, and tell me how we can improve this feature to make it easier to use for you. Actually, if you come to financial page, we have these sub-menus here. You can jump to different sections very easily in one click. You can jump to different sections, balance sheet, for instance, and income statement, And yeah, you can look at the earnings per share of Walmart just by clicking here, or change the number of years. Yeah, back to top and change the number of years here. Probably, yeah, I'm using it. This is just a new released feature. I'm using it. I feel that maybe we should keep this year's frozen somewhere on the top also, so that no matter where you are, you can always change the number of years. That's my feeling. And yeah, please use it, and let us know how to improve it. And the earnings per share, it's GAAP earnings. Currently, it cannot be changed. For this financial page, you can also add because we have so many rows displayed, but you can choose to just display a part of it or some rows you don't want to have, and you can customize it by click on add view here, and you will be able to do it. Yeah, you can change. Yeah, once you click on it, it come to edit mode. Then you can edit different rows. You can remove rows. You can move rows. You can remove sections, and then you save it. Next time it will appear in your view. Yeah, that's the 30-year financial page. 30-year financial page, and also, yeah, I want to remind you again. We have this in 30-year financial page. We have this customized field. You can always add a customized field for yourself. Yeah, customized field. You can always add a new customized field to display the items that we don't provide, and you can do lots of calculations. If you click on that, there will be a formula box for you to create formulas. For instance, if I want revenue, subtract something else, subtract research and development, research R&D. Yes, if I just want that, don't ask me reason, and then I can start a new one, a new item. It will be added. See, it will be added here, and even show you the trend lines and the numbers, everything. I think it will also show you in chart. Yeah, that's a way for you to customize this function, this financial page. And yeah, please try to use it. And the financial page actually is one of the most frequently used page for me, and I always use it and check it, look at the numbers, look at the charts, and let me know if you like it and how we can improve it. Yeah, that's one feature. Another feature we just released, actually we're still developing it, and we now have a test version. It's called dashboard, and everyone can modify this, customize this dashboard, and it will become your homepage, your GuruFocus homepage. And every time you come here, it will display the items you select and at the location you want. And we will provide a default view here. And here are some of the articles. Here is a new map with this we added. We released a few months ago. And this is an aggregated statistical chart. I will show you more here how to use these charts in the later session. You can see we have calendars here, show earnings calendar, dividend calendar, splits calendar, and some global market index. We're still working on this. Yeah, here are the recent viewed stocks. And yeah, and different screeners, and here are your portfolios. You can add your own portfolios. Is a discussion board, yeah, and some of our notifications. This page can be customized also. You can create your own dashboard. Once you create, it will be your page only and customized. we will release this soon, and we'll certainly make it better with your feedback. Please let me know how you like this idea. How do you like to have a dashboard which will display the things you want to display when you first come to GuruFocus? Let me know how you think and let us know. And our developers will be very happy if they see you like it. And of course, I will be happy to, and I'll be happy to serve you as always. Yeah, that's a dashboard we're working on. And now I want to share some thoughts on the market. We know that although we had some bad days of the stock market in the last few days, but we're very close to the top of the market. We are very close to the all-time high of the market. We're only less than 2% down, I think, with today's market. And so where we are with the market, if you want to check where we are with the market, you can always check the Buffett indicator. You can see that this is a total market cap over GDP. This chart here, the green line here is total market cap over GDP. And the blue line here is with some modifications, because we know that the Fed has been printing money, and the Federal Reserve balance sheet has been ballooning. And we create another ratio. Instead of total market cap divided by GDP, we use total market cap divided by the total of GDP and the assets of the Fed. The add GDP and the total assets of Fed together, then we use total market cap to divide that number, and we come to this blue line. And even with that, the valuation has been extremely high, has never been higher historically. It's more higher now than it was at the peak of dot-com bubble. So this probably tells us something about the market. And of course, we know the interest rate is at the historical low. And if we use Buffett's model, try to predict the future market returns, and the future market will not do well at this point. From this point, that's our conclusion. But we will never know until it happens where the market really is. And of course, another ratio we have is a Shiller P. Shiller P basically is telling us a similar thing. It tells us Shiller P is 57% higher than the market average, recent 20-year average, and now it's at 40, and the average is 25. So it's much higher than it was before. So if you look at here, I think it shows historically. Yeah, historically, it seems like dot-com years, it was higher than it is now. But historically, only dot-com years was higher. Okay, this is overall market valuation. And another thing is at the beginning of the year, we saw some signs that the value stock may outperform growth. I personally thought that would happen, and but actually it did not happen. Now it's already December, and we don't have much left for this year. But if you look at the value stock relative to growth, and you look at this part, and this at the beginning of the year, there's a little peak here, at the beginning of 2000, and the value stock was kind of doing better than growth. But until today, growth did even better, and growth stock has been outperforming value for last 20 years, and it has actually never done this well before. And let me explain this chart a little bit more. Sorry about that. Maybe I was too fast. This chart is the 5-year rolling 5-year return of Russell 1000 value index and Russell 1000 growth index and the difference in the returns of these two indexes of 5-year rolling period returns. And we can see that in the 1980s, value was doing better. Then 1990 growth was doing better, and growth did the best during the dot-com bubble. Then value was doing well in the first decade of this century, 2000, before 2008, between 2000, 2008, value was doing well. But then after 2008-9, the financial crisis, growth has always been doing better, especially the last 5 years, starting 2017. And the growth has been doing so well, and the trend seems to be continuing at this point. The trend is continuing. And yeah, that's where we are. But I will show you later that the valuation is a different thing. But last 5 years, growth has been doing really well, extremely well. Now let me look at the questions. Can I? And yeah, if you have questions, feel free to put it in the chat box of YouTube, and I can see it. I will answer them as I go. Okay, earning call company, whatever they're doing, do conference. Yeah, we're trying to. Yeah, fund manager letter is a good idea, and earning call. Yeah, Graham, could you please? Record those. I think it's a good idea. Earning calls is a good idea, and yeah, we'll certainly consider it. Price forecast for the stocks on the dashboard. Not sure what that means. Price forecast. Okay, it's your own forecast, or we don't forecast the prices. Trouble with having website after it has been open for a while. Okay, if you have a problem with using the website, please create a ticket, and our developers will see it, and always include a screenshot or a short video so that we know what the problem is. Okay, and I'll continue here. I talked about the value and the growth. The growth apparently did better, and so I'll show you some something which is quite amazing to me. And let's look at the distribution of the performance. Yeah, if you come to all-in-one screener, just click on this aggregated chart, you can see that this shows you the distribution of the market. Now I'm just showing the US market. You can see today, more stocks are up than down. The green color is up, and red color is down here, up about 6,000. Actually, they're close, but slightly up, more down. The median has been about 0.05%, and the mean is 1.77%. And if we look at this year, and here I changed to YTD, total return, and we can look at this year, the market has been doing really well. You can see that a lot more stocks are up than down. If you look at here, the green color is up, a lot more up and down than down. And for this year, if you look at the last 3 years, if I just search here, 3 year total return, 3 year annualized total return. And yeah, the 3 year also have a lot more stocks up than down. I'm not sure why these numbers did not calculate there. And Graham, could you write it down? We can ask the developer why it's happening that way. And yeah, we can see that a lot more stock is up than down. We know that market has been doing really well. And Now, one thing, if you look at the sections, different sections can do it are doing differently. We actually added a new feature which will be released and which is not released yet, but we can see it in the dashboard. The dashboard I was showing you. The dashboard I was showing you about the sector performance. Different sectors are doing quite differently. Okay, it's this chart. If I move this one on here, so it become, oh, where is it? Okay, let me move it to the left side. So it's a bigger chart here. Yeah, and this is today. Okay, today SP500 is up that much. If you look at 1 year, okay, if we look at 1 year, this 1 year we can clearly see that energy has been doing the best. Energy sector has been doing the best, and then consumer cyclicals, industrials. We know that energy was doing very poorly last year due to the pandemic, and last few years actually due to the oil price crash. But last year, last 12 months, energy has been doing very well. Cyclical stocks have been doing well. That's due to the pandemic. And we can see the SP500 averaged about 24.7%, and utility doing poorly, healthcare doing poorly. And if we look at 5 years, the NASDAQ index has been doing very well, and the technology overall has been doing well. SP500 doing well, Dow, and different industries. They're all doing really well. This is a new feature we will release in the new website, in a new dashboard, and we are adding a page here. And we're still working on it, but it's a new feature we will be releasing. And I'm just trying to tell you that different sectors has been performing differently, and we can see it actually here. This is a 3-year performance. And so how about if you want to know how the market has been doing? We know that last 3 years, the market has been doing well, but not every section of the market actually do well. And if I show you actually, yeah, if I show you that here, if I come to 3 year, if I go back to 3 year average total return, 3 year annualized total return, and we look at the different market caps of stocks with different market caps, and I want to show a layer chart instead of overall. You can see that if you look at the layers, this is the lower one is large cap, is mega cap, and this second last one is large cap, then mid cap, and so from small cap to larger cap, from top and down. You can see the mega cap and large cap are doing really well during the last 3 years, but the smaller cap, like nano cap, micro cap, they didn't do as well. They had a lot more stocks are down than up, but the mega cap and large cap is mega cap and large cap has been doing really well, and that's if we show it in different market caps. And now if I look at instead of the performance, if you look at the valuation, it's very simple. I just look at the PE ratio. Yeah, the PE ratio. You can see the median PE of different market caps is totally different. As large cap has a median PE of 27.8. the mega cap, and the large cap is 22.441. As the market cap goes down, the medium cap is cheaper. It has a median P of 18.3, and the smaller cap is even cheaper. It has a median P of 15.04. A macro cap is 13.32. So from the previous chart and this one, we know that the market in small caps and medium caps have not been doing really very well, but the valuation for these smaller companies is much better these days, much lower than these days. And so that might be something we should think about. We know that large company stocks have been doing well, but the smaller company are mostly ignored, but the valuation is much lower than the large cap. That's probably something as value investors we need to think about. We should not follow too much with the trend. That's something I'm thinking about. Any questions regarding to this part? And lots of suggestions for the dashboard. Yeah, thanks. Yeah, we'll certainly, if possible, we'll certainly add everything you're suggesting. And yeah, so from what I'm talking about, we know that the smaller companies is much cheaper than these days than large companies. That's the truth. If you don't know how to use it, if you don't know where it is, again, it's under the all-in-one screener. And once you come to all-in-one screener, you can look at the aggregated chart. And an aggregate chart here, it tells you, you can look at all the parameters here. We can do a search here. I was showing you the P ratio. Now, of course, it can be something else, can be PS ratio. Different market sections have different PS ratio distribution, and year-to-date return. Year-to-date returns also larger companies have been doing very well. As I showed you before, that larger companies they tend to have higher growth these days, and we know that smaller companies should have higher growth, but last 5 years it's kind of different. This company can grow really quick and can grow large quickly. At least their market cap will grow quickly. Some even don't have much revenue, but their market cap grows quickly, and they have different distributions. So I would try to inspire you to check out the smaller companies. Of course, my personal preference is always high quality companies. And even when you check smaller companies, I encourage you to check high quality companies instead of the lower quality companies. And yeah, okay, talking about the quality. Here I'm showing the market cap. You can also look at the quality rank. So different type of qualities, different quality rank, and the YTD total return. Again, here is lower one is higher quality 5 stars, and the upper one from 1 star to 2 star, 3 star, 5 star. You can see that again, the high quality companies have been doing better, and there are less companies lose money. The up and down ratio is 1.8 to 1, but smaller companies like here, lower quality company 2 stars, 1.5 to 1, and the lowest quality companies, you can see that more stock are down than up. Okay, good question. How do I define high quality companies? Okay, I show you another screen here. For every stock, we have a summary page. We have some summary page. We can see we have ranking of financial strengths and profitability here, and we always, for almost every company, as long as there's enough data, we'll have rank of financial strength and profitability. And the quality is actually based on the average of those two, with slightly more weighting on profitability, but the highest rank for highest rank will be 5-star, and 4-star, and 3-star. You can go down that way. That's what we use. I'll give you some examples. We know that Apple is a great company, and we can look at the profitability rank is 9. The financial strength rank is a little bit lower because Apple has issued some debt, and it lowers the rank. If we look at like Berkshire Hathaway, the rank is actually not that high. If you think that Warren Buffett has so much cash, but because it has lots of operations such as insurance, it has railroad. And I personally, of course, Warren Buffett bought railroad companies. I personally don't think railroad is a high quality business. Actually, he said that also. He said that because he had too much money, he doesn't have lots of choices. And so he bought railroad companies. The quality is really not that good. It's really asset heavy and needs lots of capital investments all the time. Of course, later on, Warren Buffett bought Apple, a much higher quality company. And Berkshire Hathaway, as overall, the quality is not ranked very high. Okay, you want to look at Alibaba? Alibaba is like a hot stock these days, but hot in the way down. It has been going down almost every day. And from the peak, if you look at the chart here, small chart here, from the peak, it's down 60% already. It's unbelievable. This year's Berkshire Hathaway shareholder meeting, Warren Buffett said Alibaba and Tencent are top 10 market cap companies, but not anymore. Its market cap has came down by 60%. Now the market cap is 300 something. 300 and 300 billion, only about 20% Google. So the market cap has come down a lot. And yeah, how do we rate how many stars? We actually don't display the quality rank yet. I think we can display it for the financial strengths and the profitability, basically based on this. I think we can display it here. That's a quality rank, but it doesn't mean the valuation. When a company has high quality, it doesn't mean that the value it's a good investment all the time. But because valuation is also a factor, the future of the company is the more important factor. And in this case, Alibaba, the P ratio is only 18, less than 18. It's unbelievable. It's kind of unbelievable. If you think several years ago, not several years ago, let's look at the P ratio of Alibaba here, historical P ratio. And if you look at the historical P ratio, just about a year ago, the P ratio was 44. It was 44.69. And only a little bit over a year ago, 5 years ago, less than 5 years ago, it was the P ratio was 60, and now the P ratio is in the order of 17. So it's unbelievable. Just how the market perception changes, unbelievable. So this also tells us value investing still works, actually. Okay, let me look at the question. From value point of view, stock is undervalued. However, the trend is down. Yes, this is what happens often. Yeah, the trend is coming down, and lots of worries, actually, lots of worries about Alibaba. People worried about if it will be delisted from US stock market, and what will happen to Alibaba as the government is having more doing more things, and it's lots of uncertainty for sure. And when yeah, that's why the stock is down so much, and that's why the valuation is so much lower than before. It's the same company, but I do know that Alibaba has been losing market share in the market in China's online shopping market. And it's a tough company, a tough decision these days. Okay, regarding to your question, should one wait with buying until trend is up again? I don't know. I cannot answer this kind of question. And I always believe that you look at the future of the company, think more about the fundamentals of the company instead of the trend of the prices. Okay, let me, any more questions? If not, let me go back to what I was talking about. Okay, I was talking about the quality rank. When we know that the high quality companies has much higher returns. This year it again happened. And it has been the same situation last several years. The lower quality companies have been doing poorly again, and the lower quality companies has more downs than up. That's actually not surprising because I wrote the book Invest Like a Guru, and I said that buy high quality companies only, buy good companies only. You want to buy companies that can keep growing, always profitable, and has high return invested capital. You want to buy those kind of companies. And if you buy those companies, even if you buy them at higher price, the price you pay too much, the growth over time, the growth of the company will compensate the overvaluation you paid, the high price you paid. But with low quality companies, you don't know what will happen. So that's why I always prefer to buy high quality companies. Now we look at the valuation of different type of companies. And when we can see that for high quality companies, where valuation is higher, there's a median PE of about 14 here. The mean is average actually 51, much higher. And the lower quality companies has a lower overall PE ratio also. Yeah, that's not surprising. High quality people are willing to overpay for the higher quality companies. That's not surprising. And okay, let me look at the questions again. Okay, should one does it make a difference in end results? Weird, I'm not sure. I don't understand in earlier you show false or do well, yet we don't know who they are. Yeah, that's actually, I think we have it in the screener. Let me look. Yeah. Yeah, we will, Craig, please, Graham, please write it down. We will make it consistent and display to users about the quality of the company. Or basically, it's from our financial strengths and our profitability rank. Okay. Yeah. Okay, I can explain about the GF value chart. If I come to the GF value chart again of every company, as long as it has enough data, we'll display a GF. We'll have a value estimate, current value of estimate, and the future. Actually, look at this different years. It's a future valuation chart, and then we draw a GF value chart. And this black line is the fair value. When it's below the black line, it's undervalued. Of course, the more the lower, the more undervalued it is. And when it's up, when it's very high, look at this company, Apple here, it's much higher than the fair value we think. And yeah, it's more overvalued in this case. There are companies that, of course, that unbelievably overvalued in terms of GF value chart, but it has been going up. It has still continue to go up. We don't know when it will stop or it will never stop. I don't know, but for most companies, at least it follows the GF value chart. Another company here. Yeah, and most companies they follow the GF value chart. If you have other company you want me to check, I can certainly check for you, or you can check. Does the chart show which company are higher quality? This GF value chart does not show the quality. The quality is mainly shown by the financial strength and the profitability rank here. If you look, you want to know the quality. Financial strength basically tells you how strong the company is financially. Does the company have a lot of debt? If you look at the lower ratios here, does it have cash to debt ratio? Does it have lots of debt? How about equity compared with assets? And the debt to equity. A more interesting one, actually important one, interest coverage, 12. In the case of Walmart, it has 12 times the interest coverage. Benjamin Graham said you should have at least, I think he said at least 5 times the coverage. But these days, interest rate is so low, and it has an easy coverage. And the F score, Pijowski F score, I think everyone needs to look at this score. Although it's kind of ignored, everyone should take a look at this Pijowski F score. And it tells you, if you click on it, actually, if you click on it, it tells you how it's calculated in details and the history. It tells you how it's calculated. We have detailed explanation how it's calculated, and yeah, it has. You have to answer 10 questions to calculate this Pijowski F score, and I think it tells you the trend of the company. Actually, the direction of the company, how the trend is going, most likely, and when you have a higher Pijowski F score, like 7 and above, most likely the trend is of the company is doing well. And when you have a lower score, it may not. Let's look at the Alibaba again. Yeah, Alibaba is 6. It's not as good as Walmart. And let me look at another company, maybe Gap. We know that it has been doing poorly. Yeah, okay. Trend is doing better than before. It's doing better than before, and any company, if you can think of, I can only think of usually high quality companies. But if you look at another one, Procter and Gamble. Yeah, F score is 6. So check this F score, and it tells you the trend of the company. And then Z score, Altman Z score, it tells you actually the company is financially strong, safe, or distressed. Usually, if the company is distressed situation, I would suggest you to study it carefully and be really careful. And okay, Verizon, that's a good idea. Verizon, it's a good company to check. Okay, Verizon has lots of debt. We know that. So you can look at the debt cash ratio is only 0.06%. The F score is not really that good. It's 5. And the financial situation is kind of distressed because it has so much debt. The stock has not been doing really well either. Stock last 10 years it didn't go really much. Didn't do much. Last 10 years. Yeah. That's why I always buy high quality companies. Another one, let's look at AT&T. Its competitor seems to be even worse. The financial strength is even worse. The F score is even worse. Situation is getting worse. The stock has been doing really poorly. As the last 10 years stock is down. If you bought it 10 years ago, you got some dividends. But if you bought 10 years ago, you're done with AT&T, unfortunately. If you look at another company, Philip Morris, actually Altria, it's a company that makes cigarettes. Yeah, the financial strength, we know that financial strength may not be that good. It pays lots of dividend. It pays most of earnings in dividend, but the F score is good. The financial seems to be safe. The stock has not been doing really well last 10 years. Last 5 years doing even poorly, but the dividend payment has been really high. And okay, to disclose, I personally have a big position in it, and I bought it last year. The dividend currently is about 8%. 8%. Okay. Yeah, that's financial strength of the company. The F score, I encourage you to look at click on each one of those, and especially F score, it's an important parameter. And also WACC versus ROIC is an important parameter. You always want to have higher ROIC than the cost of capital. And if you look at it, we have a historic chart even for that here. It's, the green is return invested capital, and the red is cost of capital. The black line is the difference. You want to have higher WACC overall, over higher ROIC over cost of capital. Yes, we can add the quality indicator on it. Yes, we can. We'll add it. And any more questions regarding to I was talking about? If not, and I will go back to what I was talking about. Always, I like this aggregate chart very much, actually. And it tells you a lot. If you look at complete with it, valuation rank, we look at the valuation rank. And year to the YTD return. Okay, actually, this is actually what was strange. And we know that valuation rank, the highest rank, we saw that as value investor, we saw that the lower valuation will give us better future performance. But at least it was not a case this year. It was not a case over the last several years. And we can see that 5-star valuation rank, the performance actually not that good. The 4-star and 3-star did better. So overvalued stocks actually did better than 2 stars. They did even better. Did also better. So the somewhere in the middle of the valuation, like 2 stars, 3 stars, not so overvalued. Like 1 star is there, like extremely valued. They didn't do really well, but the cheap ones didn't do well either. And the ones that do better are the ones seems to be fair valued or slightly overvalued. And that's what we had. So as value investors, we tend to look for lower undervalued stocks, but at least history told us it doesn't always work, at least not in the last few years. If you look at last 3 years, the 3 years, the lowest valuation stocks did the worst, unfortunately. And the fair valued ones slightly overvalued ones did better, like a 2-star here did really well. Even longer term, even the overvalued ones did well, and the undervalued ones don't do well. Yeah, that's the reality. We thought that that's different from what we thought. Okay, let me look at the question. Is my portfolio listed in the Guru section? No, it's not. But I do use all the strategies we have on the website to invest. One strategy I use a lot is under model portfolios, the most broadest held portfolio. I invest in this portfolio. Another one is in all-in-one screeners. I invest in high quality screener. We have a high quality screener here. And that's where I got started with all my research. And I do a screen here, and I invest a lot in these companies, the companies that appear in this screen. That's what do I use? I only use the screeners we have on the website for my own research. Okay. Okay, yeah. The other way to set a stock price alert, yeah. Graham answered your question. You can do that in the portfolio section. You can create your own portfolio there and set up price alert, your price target for the stocks you want to track. Okay, the new dashboard will be released in about a month. We still have places to improve, I believe. But after we release, you can always give us feedback to improve it further. Okay, I was talking about the different valuations, different 3-year return of different value companies. And now if we look at the valuation, actually I'll look at different parameters here. We had quality, we had GF value. Okay, GF value. The market is actually telling us also something we need to know. Those for the last 3 years, instead of last 3 years, I'll look at YTD. Yeah, the GF value significant overvalued ones. The overvalued ones actually did also better. They did better, and the undervalued ones didn't actually do that well. And yeah, but I think we need to kind of modify this chart to reflect the future instead of we look back. And I have some thoughts on this one, and we'll work on that also. Any questions so far? Any more questions? If not, and I always encourage you to use our own screener. We have a lot of screens we built here. It's under screeners. We built here, and you can start from these screens. You can start from these screens to many. Look for the ones that's close to what you want, and then start from there. Then to add more parameters to it, or to remove some parameters, to add parameters like financials, insiders, gurus. You can add and remove parameters for your own use. And after you do that, you can always do a backtesting. You can do a backtesting here. Okay, it's here. Do a backtesting, select a parameter, for instance, I want ROE from up and down, and yeah, look at last 3 years, and I always try backtesting parameter. yeah, it will do the calculation for you, and to see if your strategy will work. Try that. Always try that. It can be helpful. I would say it can help you to avoid certain mistakes, and to see, at least get some idea what will work, what will not. Yeah, as I randomly set some parameters here. This dark line is okay. This upper line is a portfolio gain. Portfolio gain. If I look at remove this. Yeah. Okay. That's about backtesting. Always there's actually lots of time ignored by our users is that we have a customized tab here, which you can add filters, because we cannot possibly cover everything you want, everything you want to filter with, but you can always create your own filter. You can always create your own filter here, and to do screening. For instance, I do a revenue subtract something else. I did research and development. I'll just do research and development here. Yeah, once you're while you're typing, you can see that it's, some examples are already shown here, and you want it a bit higher than certain value, higher than, for instance, in certain value, then you confirm it. It will start filter for you. It will start filter for you already. It will combine with parameters I already set, or you already set, and then it will show the items you want. Show the items. This is the item I created, but you can always do that. Okay, that's about what I want to talk about. What do I see Chinese equity market for the next year? I don't want to predict the market. This year, Chinese market has not been doing well overall. Next year, I would say the economic situation in China is not really that good these days. Lots of companies are laying off people, at least from news I saw. Yeah, the housing market bubble is bursting. The economic situation seems not so good, not so bright, at least for foreseeable future. In this case, maybe the market will not do well, I would say. Let's see, but don't quote me on that. And I never predict market correctly. One thing I always do is I invest in high quality companies, and that's something I'll keep doing. And seems like there's no more questions. Thank you all very much, and I will see you next year. Actually, we're thinking about something else. I'm thinking to start kind of a dialogue with another investor together, answer questions to you also. That's something we're thinking of. If you have suggestions, always let us know. Again, wish you a great year in 2022, and always come to GuruFocus. Bye.